Hello, everyone. Welcome to yet another episode of Punch Card Investing. This time with the full crew on board with our various time zones to coordinate. So fantastic to see everyone's smiling face, and happy to have all of you here with us today as well. As a reminder, as with every other episode, go check out the Discord in the description below if you want to join that, where we talk about all things value investing, continue the conversations from these shows, and whatever else you might want to talk about in there. Lots of great content in there, and lots of good investing ideas as well. And you can bounce off your ideas too. So that is the Discord in the description below. But this week since it's the middle of 13F season, 13Fs are the quarterly filings that U.S. investors have to make with their U.S. holdings, that is. Where if they have a certain amount of assets under management, they have to report what their holdings are. So it's a great chance for shameless cloners and others to take a look at what the biggest players in the stock market are doing, what they've sold off, what they're invested in, what their major holdings are, and it can be a great source of inspiration as well. So we wanted to talk about all the activity that we've seen recently, some of the big news, and some maybe the more overlooked news as well. And of course, if you guys have questions about it, go ahead and pop them in the chat, and we'll get to them at some point within the live stream, definitely towards the latter half at the least. Anyone want to kick off our 13F episode?
Well, we might as well just start with Alibaba, right? That's got to be the biggest news for anyone. Does anyone have something that was bigger news than Modus Provibi and Alibaba?
You got the birdie Tesla short options, not really short options. That's gotten a lot of press. I think those are the two biggest that probably.
Jack, can you pull up Dataroma just specifically for Alibaba so we can see all the activity?
Yes, give me one.
Wasn't Charlie Munger buying something bigger news? The fact that he hasn't bought anything for a decade.
The biggest news, yeah.
Yeah, it's funny because I guess his 13F came out so early, it kind of feels like older news now, but it is for the same quarter, right?
Mm-hmm. Mm-hmm.
And here we go. Here's Alibaba.
Can you zoom in at all?
There we go. Better.
And there's a lot of big names there. Eh?
Oh, yeah. It's a who's who.
Yeah.
This is just all on Alibaba from the last quarter. So lots of activity, seeing as though there really wasn't much of anything before. Some people obviously had holdings in it, but of all the big names, a lot of activity.
Yeah, the only guy I didn't see there that I would have really liked to is Li Lu.
Yeah, I was curious to see what would happen with Li Lu. I had a feeling he might buy back in just because Charlie Munger did, but interesting to see that he sold off last year, I think, and he stayed out of it again. So,
yeah, I wonder if do you think there's any chance Li Lu could own the shares just directly on the Hong Kong Stock Exchange and they perhaps wouldn't show up in a 13F?
That would be my guess.
Absolutely.
Yeah, it would show up on ticker though.
Oh,
yeah,
let me check.
Not necessarily.
Yeah, he'd have to own enough for a filing, right? I don't know how much that would be for Baba.
Also, one of Li Lu's holdings, I think it was like Postal Savings Bank of China. I was able to find it through kind of the equivalent of the SEC in China. I could tell that Li Lu owned it, but they didn't have it in ticker, so that they don't have everything in there.
Yeah, no, I think they only pick up things that have been like reported in some way.
Yeah.
Well, I mean, it was publicly available, but maybe they're not looking at that particular source.
Probably not.
Yeah, I guess there's a chance he still owns it. I really want to hear his thoughts on it anytime soon, or even Monish now can speak publicly about it, I guess, now that we all know. Because I guess he's owned it since the last time he really had these interviews and question and answers and stuff, but no real direct comments about it, as far as I remember.
I think he's talked about it in, the whole spawner discussion in some of these business school talks, but I don't know how much he's gone into Alibaba specifically. I think he just kind of gave it as an example of an Apex spawner.
Yeah, I think in that slideshow he had at some point, it was one of the Apex spawners he showed as an example.
Yeah, and it's interesting because it kind of breaks his market cap rule, right? He was looking for businesses under a certain threshold that could be potential 10 or 100 baggers, and this is well over and above that, right?
That's got Karan frustrated. We were talking about it
in the talk, he said that, you want to be invested with Jack Ma and Jeff Bezos, so on, but when the market cap is much smaller. And here he's kind of just going against that rule, which is
Charlie, man.
I think he's really gone against everything he's been promoting. Like in that switch of investments that he's talking about, moving towards these compounder positions, I think Alibaba doesn't really match that whatsoever. I could understand it as a reasonable investment. It's undervalued and all that, but it's not a buy and hold forever type position just because of the size.
You don't think it could grow to trillions, Frank?
Well, yeah,
take over the whole
could,
world.
What's it now? What's the market cap? 500 billion?
600 billion, something like that.
Yeah, so it could 4x from here. So you could hold it for 10 years or so. And that makes sense. But with the type of investments he was talking about, these coffee can type positions, it doesn't quite meet that criteria. And certainly the fact that he mentioned market cap and then goes and buys one of the most expensive companies in the world.
Yeah,
it is a weird move, considering what he's been preaching. Be unreasonable, all that stuff that was kind of his core tenets. So maybe it is just a shameless clone of Charlie Munger, since he's so idolizes him so much. Got a question here from Matthew. How many of us have bought Baba? I own a little bit. It's a smaller position. I actually had it before the Munger announcement, and I doubled it from there. It's probably about $1,000 in my little portfolio, so not too much. Anyone else? I know Brad followed Munger in.
I own some. Yeah, absolutely.
Brad backed up the truck.
Yeah, in Phil Towns' language, I backed up the truck.
Is it your largest holding now, or is it up there?
Micron is probably bigger, just because it's gone up significantly.
Yeah, so largest at cost.
Yeah, for sure.
Say? Yeah.
Mm-hmm.
I don't think I'll enter the position. Not that I don't like it. Like, I can see how undervalued it is. I can see it as a reasonable 5 to 10 year holding, but it doesn't meet my investment criteria just because I like smaller micro cap type companies. And China still scares me a little bit. There's a lot of uncertainty in my mind.
That's the thing holding me back the most too, Frank, is the Chinese regulatory risk. It's just, I don't understand it enough to be comfortable with it. And there's certainly a lot of exposed risks as well that we've seen in the recent past. And it's definitely a deterrent. That could be the reason if these numbers are to be believed, which they're great, that might be why it's trading at a discount compared to something like an Amazon, for example, which is a closer comp. That would be my guess, but there's a lot of things that go into it, of course.
Part of me wonders with Pabrai buying in, if part of it is, he wants to kind of help himself learn, not only learn from a great spawner, but learn about China. Maybe it's some kind of play in that way. Obviously a clone of Charlie, but I think there could be some of those benefits as well. I don't know. What do you guys think?
I don't think he'd use his investors' money for it.
Yeah, right. That'd be a bold move. Hey everyone. I'm going to use this to learn about the market.
Well, first and foremost, a clone of Charlie, right? But with those benefits as well.
Yeah, he does have that nice excuse that I was just following Charlie Munger, right?
And it's a 10% position, so 9%.
Right.
Whatever.
Yeah,
full bet
part of me also wonders, he's talked about a couple of times how he views his portfolio as like a slow-moving ship, I think is the analogy he gave, where it's going to there you go, where it's going to take some time to turn around, which I guess in terms of like liquidity, he's a big investor, but he could liquidate his portfolio pretty quickly still. I think it's more about him trying to find new ideas. And I sort of wonder whether he views Alibaba as one that almost fits all the criteria, but he hasn't quite found another 8 or 10 to fill the portfolio with. And maybe he just kind of dipping his toe into the water with this new strategy. I don't know. That's something that kind of ran through my mind.
Alibaba does meet like the typical compounder criteria. It's a high return on equity or high returns on capital business, fat margins, growing fast. Like everything else about it is good besides the size of the company. So I think he might be having a shorter term mindset and plus the cloning mindset of Munger as well. But I can see why people like the position. It just doesn't match my philosophy, I guess. And then I can't move past the risks of the Chinese regulations and everything else.
I think that's a fair take.
Yeah, I sort of think Monish is probably defaulting to Charlie's view on that topic, which he's spoken about pretty openly in the past.
Does anyone know about Greg Alexander and his holdings? Like, does he have other international holdings or?
Yeah, he's got 4 or 5, I think. I'm not sure if you can pull up Conifer Management on ticker.
I'm not sure. Let me see.
Jack, but he's got a few. There was lots that I hadn't heard of. The only one I was familiar with was Naked Wines, which I think is a UK business.
I'll take a look.
Which Norbert Liu is also in. Shout out to Punchcard Capital.
Yeah.
But yeah, he does have a few international holdings.
Wow, what
Have you looked into Naked Wines, Tom?
Not in depth. I've heard Bill Brewster talk about it a little bit, and I saw that Norbert Liu has owned it, but I came across Norbert Liu after Naked Wines had already like doubled or tripled from the time he bought it. So I sort of just went, it's probably not worth spending time on.
Elliot Turner's another one that is in on Naked Wines. And I know Bill Brewster, he was in and out, I think. He ended up selling after having some problems with his own purchases of it, as far as I remember from his podcast.
Yeah, I heard him talk about that as well, because Naked Wines is it's basically like a wine box, I'm not even sure if it's a subscription or if you can just purchase like boxes of wine, get delivered to your house, but they have this full refund policy. If you don't like the wine, like you can just pour it down the sink and get a refund. And Bill Brewster was like, yeah, that's fine, but me and my wife are having this dinner party, and my wife's at the point where she's like, don't grab another bottle out of that box of wine because every single one of them's gone down the sink so far. And you can only have that customer experience for so long, right? So
I think it was a big COVID beneficiary with everyone in lockdown, of course, people getting wine sent. And I know there were other benefits. As far as I remember, Andrew Walker, I think, was talking about it on his podcast. Something to do with having it go straight from these small farms, these small wineries, straight to consumer. So they cut out a lot of the middlemen and the costs involved. So it's a higher margin than typical wine businesses, I guess.
Yeah, but they seem to not know how to make wine. So
yeah, it doesn't matter if it's not good.
It's pretty
it?
important.
Yeah.
Here's Greg Alexander for you, updated from this quarter.
So yeah, these are the US holdings,
Stellantis. Ooh, you gotta like that, Tom.
Yeah. He's not on ticker, unfortunately. So
okay,
this is all we got.
I found him on ticker.
Yeah,
really?
I think he is on there. Conifer Management.
You might be able to search the fund if you search Conifer Management.
Yeah, okay, I'll search it then.
But yeah, and I guess even in that US portfolio, he's got JD, so that's an international one as well. There's a few there.
Mm-hmm.
What else have jumped out to you guys from the 13Fs? Alibaba is probably the biggest one. Should we talk these Tesla options from Michael Burry? Have any of you dug into that very much?
Yeah, I mean, it's. I found it difficult to actually dig into. You can speculate all day, but it seems like all we know is how many contracts of put options he bought and what the notional value was, which doesn't tell us anything about what kind of contracts he bought. So I don't know, Karan, have you looked at that at all?
No, not at all. I was more interested in his treasury bond. The TBT of the Riyals.
I just find it amazing.
Good. That was a good investment, yeah.
I can't believe how much the media ran with this huge $500 billion bet or whatever the.
I mean, in some ways it makes sense, right? Everyone wants to know what Burry's doing and what Tesla are doing, and they want to see a number, and it makes sense, but it's silly. It's not accurate, which is kind of frustrating.
Yeah. Jason should also tell us what's for dessert if anyone's seen that comment.
What's that kind
If you listen to the After Dinner Investor podcast,
After Dinner
you'll get
Investor,
that
I was
joke.
like, yeah,
Otherwise,
it took me a while.
Did you manage to track down that portfolio on Ticker at all, Jack?
For Conifer? Yeah. Where do you find it?
So if you go to Track Investing Gurus, you
Yeah,
can type in.
Oh,
if you
there it
type
is.
in Conifer,
No,
it should pop down.
I was using the wrong search bar. That's why.
Yep.
That would explain it.
Multiple search bars.
Yeah.
Yeah, gets me every time.
Is there any other big takeaways from 13F? So Barber obviously being the biggest move.
Well, one of the ones
one
I
other-
was. Yeah, go ahead.
No, you go ahead. You go.
One of the ones I was curious about, you guys knew, I think Jack and Karan, you knew about Domino's before the 13F came out, right?
For Pershing Square, Bill Ackman.
Did he send a letter to investors out before
No.
the 13F?
It wasn't a letter, actually. It was an interview with Wall Street
Oh,
Journal, like a couple
gotcha.
days before. He spilled the beans there, and then what Karan was suggesting that the bigger reason that he was selling off Starbucks, which is what he did before they bought Domino's, completely sold off their Starbucks position, was because they were trying to raise cash potentially for buying forward purchase agreements for the SPAC, since he also said in that same interview that they're getting close to a merger, and that would seem to be indicative of that. What was also relevant is they sold off a number of other parts of their other holdings as well. So I think that totally plays into that thesis that Karan was suggesting. Here's
Yeah.
Oops.
He also revealed like a week before he mentioned the Domino's position that he sold out of Starbucks on this like tiny YouTube channel called iVesta or something.
Uh-huh.
He mentioned, he's like, "Yo, we sold out of Starbucks," and everyone's like, "What? What did you
Yeah.
buy into?" And
Because there's only
He's
so
like,
many
"Oh, yeah."
positions in here. So yeah, completely
Yeah.
sold out of Starbucks, and then is in like you see the changes there.
You know, one thing I like about Acton's portfolio is the fact that there's no Facebook, Google, Amazon,
Yeah.
Apple. Yeah.
You
And
like
he still
that?
managed to do well. Yeah.
Yeah.
Very
It blows my mind that he's still hanging on to Chipotle at like 100 times earnings almost.
They love restaurants too much, but I guess they sold Starbucks.
Yeah. He's
on the
which is a
board.
restaurant.
That's amazing. Because like Phil Town was selling at $500 a share, saying this thing's fully valued, and it's tripled since then.
You could say that
That's
about
amazing.
it. I was definitely thinking that with Starbucks and how drastically it rebounded. Is I mean, for my anecdotal evidence, I'm in Chicago and there's 10 skadillion Starbucks in downtown, and they're all empty. I've been into a few since I started going back downtown again. And I imagine it's like that in most big cities right now. And I just don't know, like, that's risk added. I'm not saying Starbucks isn't going to make it. They're doing totally fine. But that's significant. And the fact that it rebounded so quickly, even before customers have really started to rebound, I'm very happy with the decision to sell it where it was. Will he do the same thing with Chipotle? I'm not sure.
I wonder what his cost basis is in Chipotle.
He bought Chipotle in 2015-16 when the E. coli scandal had happened.
Oh,
Yeah.
perfect.
Which one?
He worked with the founder to replace a couple of people on the board and take a 10% position in the company. So
Oh, he must be crushing it with that one.
Yeah.
That would have been that got down as, I don't know where he bought it, but it got as low as like $250 a share, I think.
yeah, he bought it right at the bottom. So
There you go.
Pulling it up in a second.
I don't know
Yeah,
too
it
much
looks
about
like-
Chipotle, but is it mostly just a US business? I don't think there's any in Australia that I know about.
it's only in the US. Yeah.
So I guess it still does have a lot of room to grow then if they are looking to expand internationally.
Is that
Certainly in comparison to Starbucks anyway, which kind of is already everywhere.
have they mentioned
Yeah.
ambitions to grow internationally? Do you guys know?
They aren't a franchise business, so I think they own the stores that they have. And
Yeah.
how they're planning on expanding, I think, is through cloud kitchens, possibly.
I'd be interested to see how well a restaurant like Chipotle traveled. That's something that I'd be really interested to see if they went outside of the US heavily.
Well, I know here in Australia,
Sorry, go ahead.
well, we have Sorry, we have Sombreros is one company, and then there's a public company or about to be public called Guzman and Gomez that essentially are Chipotle ripoffs, and they both do really well.
Yeah, we've got a couple as well. We've got Mad Mex and one other one, which is exactly the same. It's just a Chipotle ripoff. But they're hardly like
under. That's great.
Yeah, they're hardly taking over the country though. Like there's maybe one or two in my city, kind of thing.
Are there lines when you go, Tom? Like, is it busy?
No, like McDonald's and KFC would be busier. Like there's one in a local mall, like at a food center and or food court, and I mean they do okay, but they're hardly the best performing place there.
Yeah. Yeah, I just saw the Pershing Square's SPAC jumped about 10% on the news that he was saving up stockpiling some cash.
The speculation. Well, the thing is, the SPAC has jumped, but then like the actual fund is still like sideways. Like it's done hardly anything.
Which is great.
Yeah, it's great if you want to take advantage of the SPAC movement, because if the SPAC's over 24 by the time they merge, which I mean, I'm not going to say anything's guaranteed, but like it seems pretty likely that would happen if they find an okay target. Pershing Square directly benefits from that because of the warrants and the forward purchase agreements. So they get a huge discount on whatever they merge with, pretty much, as long as it's over $24 a share. Which the cash value of the actual value of the SPAC's above that already. I think it's above at like 25 right now or something.
The buy-in price is $20 per share.
Yeah, so that's the cash value is $20. But they're actually trading at about $25 a share now. So as long as it's over that, Pershing Square gets an immediate benefit pretty much.
I hope the NAV increases but the price stays flat. That's okay.
Locking in the Starbucks profits helps with the NAV. I was getting a little worried that these things are getting so richly valued. And even if there is some runway left, it was nice to kind of switch that down into something like Domino's as well. Not that that's like particularly cheap, but they had that flash crash sort of where it dropped down to like 330. And now it's back up well over 400. So they already have a pretty nice return going pretty quickly.
Yeah, it seemed like he almost explained it as if it was moving from one food business that he really liked to another food business that he really liked, but at a much better price. That's kind of how he explained it.
I think that's how it came off, but I don't think that really was what they were intending. I think they sold off Starbucks in isolation, and then by chance Domino's had like that really fast dip or dropped down to 330 during like a couple days.
Right.
And they decided to move some of the cash into that. But I think per what Karan was saying before is that like I think they were just trying to pool up cash for the actual SPAC. And then by chance the Domino's thing happened.
Lucky timing, right?
Yeah, I really do think it was just lucky timing. Or perhaps unlucky, depending on what they were actually trying to do.
Yeah, but he's also bought more into Howard Hughes, so
they did.
That is
a little bit more there.
Money. Mm-hmm. He's doubled his investment since March on Howard Hughes. Yeah.
He's doubled almost everything since March.
Yeah.
Yeah.
So I think
what a time to just run into some new money.
Yeah, really.
And have that to put to work.
Exactly. They're clicking on all cylinders right now. The fund price isn't, but the fund itself is.
Yeah.
I agree with Luis. The pizza's terrible. Domino's, I just can't.
Me neither. Not a fan.
Yeah.
Luis,
I actually used there's a Domino's franchising business that trades on the ASX that I used to be invested in back in the day.
Yeah.
Before I understood anything about trying to value a business or anything like that, I was like, Domino's. I like Domino's.
Yeah.
Let's buy some of that.
Did the coin flip work?
I think I made like 20% or something.
All right. Take that.
If I had held it, I'd be sitting on more than a double now. It's actually done quite well since I got out of it. But yeah, they're pretty good businesses, but they require some. I think Pabria actually said this. They require good management, and the Australian version of Domino's uses a fair bit of leverage to kind of juice the ROE as well.
Frank, I was curious, Elliot Turner, do you know how we can see his holdings, or how do you track him? Is it just what he says on Twitter?
Yeah, well, I listen to his podcast is where I probably get the most kind of clues into it. Sometimes he won't even directly say it. Other times he'll talk about a holding. That's where I find out most of his positions, but I'm yet to find a place. So if anyone listening knows how to find Elliot Turner's holdings, that'd be great to know. Another thing I just saw in the comments, which is pretty interesting to me, if you wanted to pull up the comment, Jack, Loveless Chawla. He said, or she said, Bonsai Partners bought Greentown Management. I'm yet to know about any update to Andrew Rosenblum's portfolio, so that's pretty interesting.
Yeah, I hadn't seen that either.
I just put it up on Ticker. It is a Chinese company as well, and pretty small by the looks of it.
Nice.
Very interesting.
So that's one I'm definitely going to dive into. So know very little whatsoever at the moment, but thanks for sharing that.
What is Greentown Management?
So I can read out or Jack, even if you wanted to pull it up on Ticker.
It up right now.
Provides project management services for state-owned property developers and government entities in China.
China's mentioned something to do with REITs recently, right? So they've started issuing REITs, or they will be issuing REITs. Something. Has anyone heard of it?
No, I haven't. Well, so what is that? They've like changed the code or something?
I'm just Googling. China to launch 4.9 billion of REIT products in pilot. So the REIT market, I guess, is coming online. That might have something to do with it.
The real estate market in China, my understanding, or at least the housing market, is like, it's enormous. Like a lot of people have multiple homes with many vacant. Like it's kind of a huge ordeal. I don't know too much about it. Just kind of a layman's understanding, but it is a very strange real estate market there, but very active.
Hey, Jack, while you're there, can you click on financials and then click on ratios on the far right?
Ratios.
So scroll down.
Oh, yeah, there we go.
So their returns on capital on average look like about 20%, so a pretty good return, and that's a high margin business as well. So straight away from a real quick glance, I'm really interested in that one. So that'll be my research for the week.
Thank you, Loveless.
Juicy.
Yeah, I think Chris Meyer owns the Domino's in the UK, I believe.
There you go. It was actually funny when I did own that ASX one. As I started to learn more and more about investing in general, that business would always, the share price would always bounce around based on what the other franchisees around the world are doing. So if like the UK Domino's came out with a good quarter, or the US one, or the Australian one, it would they would all affect each other, which I found quite interesting as well.
Nice.
Whether that's justified or not, I'm not sure. Like whether the amount of pizza being consumed in the UK is going to influence the amount of pizza, or correlate with pizza eaten in Australia. I don't know.
Probably some link in that, like you get some centralized funding or guidance or something. I don't know what kind of value though it would.
Economy of scale gains.
Yeah,
some sort of supply. I mean, it's probably some different suppliers all over the world, I'd imagine. I don't know. We got Seth Klarman as well. He had, with his Intel holdings. Semiconductors have been red hot, or more like just short. There's a huge shortage, so supply shortage leads to price increase.
Yeah, my understanding with Klarman, he's been in and out of Intel a few times. I don't know if you guys can verify that, but he seems to be trying to time the cycles with Intel.
Yeah, I'm not sure. I know Intel has been on Toby Carlisle's screens recently as something that's showed up as cheap on the acquirers multiple, but I don't really know very much about semiconductors. I spent about 10 minutes on it one day, and there were wild concerns about them getting outcompeted by other semiconductor companies, and I was just like, this is over my head. So I sort of passed on it. But do you have a view on that, Brad, being in Micron at all?
Not, my impression of Intel is it's cheap because they're kind of falling behind technologically with their innovation. So I think that's mainly why it's cheap.
I think,
but on an earnings yield perspective, it's like 10%. So it's, pretty compelling in terms of what else we're finding in the US at the moment.
Like like AMD in recent years has really surged in quality of their product. Like I use AMD products, for example, and I haven't used Intel at all. And I have a couple kind of like gamer friends who are who look at the specs of all the new things, so they're kind of my source of research for that sort of stuff. And Intel definitely is always just kind of forgotten right now. That could change, but it's such a research intensive industry, and they're constantly putting out new models of stuff that if you fall behind, you really do fall behind. But you could also argue that the shortage is so extreme right now that even the lesser chips are going to be fine, which has been the case recently. I don't know how far out into the future that goes, though. That's the question that needs to be answered.
I think what's interesting with the semiconductors is not so much the Microns and the Intels. It's most of the companies that supply the machinery to these companies. So Applied Materials, Lam Research.
These plants are humongous. I didn't realize how expensive it was it's like hundreds of millions of dollars or billions even to build plants, which I did not realize it was that intense. So that in that way, like you could say Intel and like pretty much any existing manufacturer is going to have a decent moat, but if there's any sort of drop in demand for their products, just as like a sector, Intel's probably going to be at the bottom of the totem pole compared to some of the others right now.
Yeah.
At least that's my feeling. And Tom's with me, AMD over Intel. So
there you go. My computer does have an Intel sticker on it.
Intel inside. There you go.
Yeah.
I recently I've built my own PC since like middle school. So I just switched out for like one of the newer AMD processors, and it's actually phenomenal. Like I can render HD footage in like 2 minutes, whereas before it would take me like maybe 45 minutes to render the same video length. So it's actually kind of amazing how powerful they are now. I can't say the same about Intel. I haven't actually tried one of the more recent ones, but AMD ones are top notch. And I got one that was like 2 years old as of like January. So anyways, that's a bit of a semiconductor tangent.
There you go.
I like this question. Yeah, go ahead, Tom.
I was just going to say I think we had a comment on it a few minutes back. I can't quite see it scrolling up, but depends who you are. You either find this super interesting or really, really boring as Guy Spears 13F, if anyone took a look at that. And that's because there wasn't a single change of any share of any company, which seems to be Guy Spears' superpower. I was kind of interested to see that. He's made some tweaks around the edges the last quarter or so, but didn't change a thing. He's just sitting on his backside, which is pretty cool to see.
There it is, After Dinner Investor.
Yeah, that's the one. And I think Guy Spear does have some international investments that are too small to file. Like I know he's talked about owning Nestle in the past, and that doesn't show up anywhere as far as I can gather. So maybe he's made some changes, but it looks like he hasn't. I've heard that Guy Spear's new passion, I think it was Stig Brodersen, said that Guy Spear's new passion is not paying attention to the stock market, which is a hilarious thing to hear from a stock market investor.
It's not tunnel vision. That's not the right word. It's not careless either, because he obviously cares. But yeah, it's just his discipline is I'm buying this for the long term. I don't really care what happens in a quarter. Which if you're not like looking aggressively to buy, or maybe you just set up your price alerts, then you're done until they come. Yeah. Don't worry about it.
Intentional detachment.
Yeah, that's a good way to put it.
I think he's been burnt from selling stuff too early a couple of times. We've talked about Crystal before. Maybe that's still scarring his memory, and he just sits on things now.
Yeah, Mautai also. He sold out of that pretty quickly. Yeah.
Because all it takes is like one of those, and like you're golden. So missing two has got to sting.
I mean, just look at Amazon, right? With Nick Sleep, that's all he needed.
That's all any of us needed.
Well, Domino's has done better than Amazon, hasn't it?
That's
last
right.
10 years.
That's right.
Yeah, I think so.
18x. Crazy.
What's Guy Spears' largest holding at the moment?
Berkshire.
Anyone know? Nice. I'm surprised you didn't add into it in Q1 because it was cheap. It seemed really cheap.
Mm.
Well, in a way, he is, right? Because Berkshire's buying back shares.
Yeah.
Yeah, true.
I wanted to tackle this one from Jesse. What is considered a good range for acquirers multiple? I don't know if any of you have thoughts on this, but I think, what did I read somewhere? An eight multiple is pretty typical for like a private company, and then if it's public, because of the liquidity, you can get up to like a 16x is kind of typical. What do you guys think about that?
A general rule I would follow is an EV to EBIT below 10 is going towards the deeper value end, but I would happily pay more than that. But as for the acquires multiple, looking for those deep value plays, I'd say below 10 is a good place to start if you're screening or something like that.
Yeah. Jack, are you able to pull up Toby Carlisle's screen? I think you can get free access to that. We can probably see what kind of numbers are coming up in that screen if people are interested.
Yeah, and I noticed Intel's, just for reference, it dipped below 9 pretty recently. So
I'm pulling up the acquires multiple screener right now.
I think it starts around 4 or 5 usually with that. On the low end, you get 4s and 5s.
And it's pulled up some surprisingly good businesses in the past. Like Apple was in there when Buffett was buying it, and that screen, which is that's crazy to think about now. But back in 2016 or whenever it was, everyone was kind of hating on Apple.
Oh, I'm not registered.
Even a stock like Microsoft came in 2011, I think. It had an EV to EBIT around 5 or 6, something really low. But if you wait long enough, you can find great companies with a screen like that.
Yeah, the trouble is if you buy just everything that's in the screen, and Toby Carlisle talks about this a lot, there's a fairly high percentage of them go bankrupt, but as a portfolio, they work out well, back tested at least.
Almost like a venture capital at that point. Almost.
You might be able to pull up his holdings, like the ETF for Deep or the other. He has two ETFs. I'm not sure which. ZIG is the one that has the bigger or the mid caps in it. And we could check some of those companies, but I'm assuming they're all below around 10 EV to EBIT, roughly.
Yeah, and ZIG does a bit of shorting as well, I think. It's like a 120% long, 20% short or something like that.
Yeah, I think he said that in the most recent podcast with this Australian Investors podcast with Owen. I think he said 120% long, 80% short or something along those lines, but he has about 50 positions or so come up if you look on the website. I haven't looked in a while, but I used to look there for ideas every now and then.
Yeah, it's interesting. I don't screen a lot, but I pull that one up, and I pull up Magic Formula Investing every now and again just to see what's showing up, see if anything looks interesting.
Yeah. That's where I found Turtle Beach, which is one of my larger holdings. Brad actually pointed it out when he was doing his Magic Formula screener kind of series. I was like, hey, that actually looks pretty good. So that's one of my larger ones from that. So yeah, it's a great easy source just to like get some inspiration.
Yeah, the other thing is, and I think you might have talked about this in one of your Magic Formula updates, Jack. It seems like these sorts of screens, from time to time, they get pulled really heavily towards one industry. Yeah. Like I know a couple of years ago, it was financials for the acquirers multiple, and I think is it pharmaceuticals at the moment for the Magic Formula.
It's like a third is pharma stocks. It's very high. And I do think that's because of like when you're using like any sort of formula, especially if it's shorter term, like if a company has a fluke year, all of a sudden it makes the list, and it might not be a moat. It might not be what you'd want for a longer term investment. So you always got to take it with a grain of salt. Though with my Magic Formula series, I'm doing just like blanket robotic, follow it and see what happens. But if you're going to adjust it, that's one thing to consider.
Yeah, I came across a Australian Magic Formula website that was screening the ASX once, and the companies in there are horrific. It's all just mining and resources and
Well, the thing is, it's a relative list. So like it could be
Yeah.
Right.
if you're pulling from 100 bad companies, it's gonna list them like least worst to worst. So like it's all relative to whatever you're in. So
How many public companies are on the ASX, Tom? Is it like almost 200?
Oh,
More
Frank
than
might know. I'm not sure.
I think it's around
there's an ASX.
2,000. I don't know. I'm not
2,000.
Yeah, there's a lot.
it's probably a decent enough sample size for picking 20, but
Yeah,
the bigger your list gets, if it's relative, you're still going to run into that problem.
Yeah, but if you backed out mining and the big banks, that number would go down a massive percentage.
Yeah,
I don't know what that is
sure.
off the top of my head.
Yeah,
because I've used that website before as well, Tom, and that's what I had to do. Is I would just scroll through until I seen a non-mining company. The screen doesn't suit the ASX well at all because there's so many tiny little micro cap mining companies, and they usually have high returns on invested capital, or they can have for the last year with a bit of luck. So it really depends.
They're the worst culprits for what Jack was talking about, where they might have one good year and show up really good on the screen.
it's almost the exact same as pharma. It's like you get some good drug product, copycats haven't come out yet, and like you're just having a fantastic year, and then give it 2 years, well, maybe 1 year, and all of a sudden you're back down to normal.
I think
I think
it's important to do a very diversified equal weight approach to that, or either the acquires multiple or magic formula, I guess, as well. Is that what you're doing with yours?
That's what I'm doing. Yeah, I'm doing the top 50 over 50 million market cap on the magic formula list, and I update it every month. So it ends up being probably about 46 stocks that are actually available on, and not like, so I don't have to pay like over the counter fees or stuff like that. So it's diversified beyond what like Greenblatt recommends, like 20 or so holdings, and I'm doing more like 45.
So I think Tobias Carlyle with his ETS has 30 positions. Well, they're about 3.5% weightings for each position, equally weighted and trimmed each. Actually, I don't know how often, but yeah. So I think that's 30 positions or so.
Yeah, and mine are all equal as well.
Yeah,
Equal as they can be, at least.
I think I've told you guys offline, but I haven't said it on YouTube, so I'll let the news out for the hardcore watching Punch Card Investing. I'm actually talking to Toby Carlyle this week, so I've managed to.
Tom is making moves. He's making funny moves. Brad's been making some moves too. Like, but
yeah,
we're getting we're gonna have some guests soon. Don't you worry, guys.
Yeah, keep an eye out, everyone.
You've been writing your questions for that one, Tom?
I was actually planning that right before we got on the stream, and I'm going to put up a post at some stage getting some subscriber questions as well. So keep an eye out for that.
Subscribe to Tom if you haven't already, guys. Though I imagine many of you
everyone has.
So Tom, is that
subscribe to Punch Card because we need to get to 1,000?
Yeah,
right.
we slowed down once we hit about 850. It's been like a couple every day. Got to get to 1,000, guys. Pump that subscribe button.
Are you doing a podcast or a YouTube video, Tom?
That's going to be on YouTube, actually.
Yeah, cool.
Yeah.
You got more leverage there.
Exactly.
Yeah, absolutely.
Got to pull out the big guns for this one.
That's right. So the only other holding I saw in the 13Fs that intrigued me was Coupang out of South Korea. Have any of you looked into that one at all?
I had a very quick look when you told me about it.
Yeah. Other than what you've said, Brad.
Okay. So viewers, take a look at that one. Let us know what you think.
What's the ticker symbol again, or the
CPNG?
CPNG.
You're asking that because someone put like 50% of their portfolio into it.
Yeah, that's what it looked like. It was Lee Ainsley of Maverick Capital. Turns out it was a venture capital deal back like a decade ago that was just finally coming public.
You can cash out.
Yeah, it'll be interesting to see if he cashes out. I'm sure he'll cash out some of it at least.
But it's the Amazon of South Korea.
That's what they call it. Yeah.
So that's a VC deal that's obviously done very well if it's turning up in 10 years as half his portfolio.
You would think it's done very well, yes.
I can only imagine what the cost basis is.
That's like that. I'm blanking on the name, but have you guys heard of that that South African listed company that was an early investor in Tencent?
No.
I've heard the
No?
I've heard someone tell the story from 2001
yeah.
or so.
Was it
a huge
Naspers?
return. I think
Yes, Naspers, that's it.
Yeah, Pabrai
Yeah.
mentioned that recently.
Yeah.
Yeah, I think I may be wrong on this, but if anyone wants to do some digging, I think you can potentially, like, technically buy discounted Tencent shares through Naspers in South Africa if you really want to get into the weeds on that. You'd have to fact check that, but I think they are trading at a discount to their shareholding in Tencent.
Hashtag not financial advice.
Yeah, there you go.
Take a look. Do your own research.
Yeah, I did see that somewhere. I don't remember if it was on VIC or where it was, but
Yeah, but Naspers is now like some huge percentage of the South African stock exchange, or Johannesburg Stock Exchange, I think it is, just because of their 10-cent investment, which is kind of crazy. I heard actually an active manager from South Africa talking about how annoying the South African index was that they're benchmarked to, because they just have Naspers with this huge 10-cent investment, and it's kind of like if you own Naspers, you pretty much like match the index, and if you don't, your performance is
behind.
wildly uncorrelated. Either direction. Yeah.
I realize we haven't talked about
Just-
Berkshire yet. Because they
there's a question there from After Dinner Investor, if you wanted to pull that one up, about Berkshire.
Oh yeah, there he is. Because they added significantly to their Kroger position. Here, let me pull up their ticker.
Does anyone know much about Kroger at all?
Other than that, it's a store.
Yeah,
Yeah,
other than it's a
as far as
store
I
that's
know.
not in my country.
grocery store, right?
Yeah,
grocery
yeah,
store.
it's a grocery store. I don't think I've ever been in one. I see them around every now and then, but I don't know too much about it. But I think what was the Berkshire theme again? They're trimming financial stocks still. I think he sold it mostly out of Wells Fargo.
Yeah, Wells Fargo was sold out of
Yeah.
like 98% or something.
Yeah, there it is.
Yeah, there
Wells
you go.
Fargo here at the bottom.
Yeah, not a lot of buying. Adding to Verizon a little bit, 8%, but
Yeah.
Yeah, interesting to see the pharmaceuticals trimmed, because those are pretty new, like a basket bet in some of the pharma businesses.
Yeah, I wonder if that was just a COVID play, just like almost like a short-term swing, like as vaccines roll out and stuff like that, or something.
I don't know. It seems like the size of it has to be Buffett, I would have thought, but it just seems very uncharacteristic.
It was weird when that happened. They also added to AON as well.
Yeah, I was surprised by the Chevron got. He got like the position by 50%, I think, right?
That might have been
Yeah.
similar. Was that like another like sort of reopening play as oil has climbed or something? Like I feel like they're almost like he's doing these like kind of short-term swings recently. Is what it feels like.
and stuff.
So, yeah.
Old dog, new tricks, or what's going on here?
FOMO. Buffett's got FOMO.
Yeah, it just seems weird. It seems like these kind of like medium-term kind of swing plays. Like he had the weird Barrick Gold play. I doubt it was him, but like you're seeing a lot more of that recently.
Yeah, he doesn't have some like old preferred stock bailout deal with some of these companies that we don't know about. I don't know. It just seems like there must be something else to explain these moves, because they're very short term.
And they're not complete. And he's not. It's like half of Chevron too. Like why not the whole position? Like what's the sizing justification? Like it is strange.
and it's not like he needs the cash to buy new stuff that he finds. So,
Definitely not.
and he also kept buying Verizon, right?
Yeah.
Are most of these positions we're talking about not just Ted or Todd? If they're so small, they're less than 1% weighted in the portfolio, aren't they?
Well, the pharma ones are pretty big, I thought. What have we got? I mean,
added Verizon up here.
Bristol Myers Squibb there is $2 billion, and he bought 4 companies about the same size, so we're talking close to 10 billion. And I think Ted or Todd only manage about 10 or 15 billion each. So unless they're putting the whole portfolio on these things, I think it's got to be Buffett.
Okay.
I think so too. And they've got $1 billion in Snowflake, which we know like that can't be. That can't be.
Because I find it,
that's got to be
I
them.
find it even more strange than if it's Buffett because he's strict about his no trimming rule. But there's trims happening to most of those companies we talk about.
That's why it's weird because it's large, but it's the partial position thing, which he's been against. Like once it hits a target, it's like say goodbye.
And he trimmed Apple last quarter, not the one that's just come out, but a couple quarters
I know,
ago.
and that was another strange move too. I guess that was getting really high weighted in the portfolio, but regardless,
maybe he's learning his lesson from Coke in 2000. Who knows?
I think he just sold it directly to Li Lu. That's my take.
Maybe that's maybe it's some sort of tax consideration. I don't really know. Just in how he's deciding like what portion of shares to remove versus not. I have no idea. Just a speculation.
Karan, have you ever made a video on Lumen? You got a question here.
No comment.
No comment. Oh wow. Now I want to probe.
Sounds like it's a 50%
the investors
position.
Podcast is good. Like they have a good.
Yeah, it is.
I think I sent it on the group. Yeah.
Yeah.
They cover it quite well.
Oh, yeah.
Okay.
Was Michael Burry in that?
He trimmed it, I think.
And he's, I think, sold a good chunk of his holding recently.
Okay. Interesting.
Be interesting to know what he's doing with that position because he is a kind of short-term trader, so he might be getting out of that completely, or could just be kind of equal weighted. Oh, it's still that big, is it? Okay.
Yeah.
We were talking about Kroger earlier. This is a good description, from my understanding as well. Type of store, local and easy, which will still be used by Amazon and Costco customers. Milk, soda, daily walk-in type of store. They're not these grand box stores. They're usually smaller from what I've seen as well. Anyways.
And I guess to answer after dinner investors' question about who's buying it, if it's that small, I can only guess Ted or Todd. But really, to me, with the Berkshire portfolio, unless it's a 5% position or more, I'm not too interested. Usually,
that's probably fair, just given.
That's kind of a general rule with all 13S for me. So if you're scrolling through the Dataroma list, most of the things I click on, they're all diversified portfolios, and I really don't put too much weight on them. I really only get interested in these big bets in concentrated portfolios.
And like we've talked about before, usually as the fund grows, it becomes more diversified. It becomes the market. Like I think Dalio invested pretty heavily in Alibaba like last spring or something, or maybe in the summer, well before this new cast has come in. But it's like it's hard to really weigh the conviction there because he's so diversified all over the world.
Yeah. The Berkshire one, I've actually been trying to pay more attention to the smaller positions because like Ted and Todd are really good investors, especially, well, it's hard to get track record information on them, but Ted, I think I've come across some data in the past pre-Berkshire that he did like cumulative 1,200% over 12 years or those numbers I haven't looked at in a while, but it's in that sort of ballpark. And I know actually After Dinner Investor on his podcast has looked into a couple of those businesses, like Suncor Energy, which I think they just recently sold. He'd looked at on that podcast. So I'm not sure if we should completely discount them or dismiss them.
Right. Charlie did mention it was a mistake to sell Apple.
Yeah, he did.
Has there been any clarity of when, I guess, Buffett and Munger pass away that Ted and Todd will fully take on the whole portfolio? Do we know that for sure yet? Or is there a chance of someone else stepping in?
I don't think anything's been confirmed other than Greg would be the CEO.
Yeah, that was at the last meeting.
But that'd be interesting to know because I think obviously that's a big part of if you're invested in Berkshire, you're obviously interested in the portfolio and what's happening there. So I think that'll be the biggest concern when I guess the leadership changes around of what's happening and the type of positions they're taking there.
Yeah, I think the subsidiaries really aren't a concern for me. It's the portfolio, like you say, and how do they make the call between deploying capital into businesses they already own to do some sort of development, like in the energy businesses, versus, I don't know, buying Apple or whatever the next stock might be.
Yeah.
Yeah, it'd be interesting to see how that plays out.
If there's any other questions in the chat we can get to, or otherwise feel free to ask away, people in the chat.
Anyone else to highlight? There's quite a bit of activity this last quarter.
Well, I have a question for you guys. Is there anybody on Twitter you've really been enjoying lately? Anybody new that you've been enjoying following?
I've just started using Twitter more than I ever have in my life.
You're a TikTok guy, right, Jack? You're in the TikTok generation.
No. I tried making TikToks for about a month, a couple months ago. It's a different group out there.
What's good financial advice?
Yeah, I put out the reasonable stuff, not the like, hey guys, like buy low, sell high within the hour, and then you'll become a millionaire like me. Buy my course. Like, I don't do that, or mention Forex or something like that.
Did you guys see Jason Derulo talking about cryptos on TikTok? It's getting out of hand.
Some of these like just blatant pumps of it's so insane. I was a young lad. I was like 4 during the .com bubble, but I can only imagine that this is kind of like what it felt like just in the crypto space now with some, like, sure, crypto's like got some steam behind it. It's got some legitimate benefits like as an industry, but then you have all these like there's all this mania around it that distracts from things, and it's going to hurt a lot of people, and already is in some cases. So be careful out there, everyone.
If you guys haven't read Richer, Wiser, Happier yet, I mean, the chapter with John Templeton and then Howard Marks right after that, it really gets into some good stuff around market cycles and manias, and it's very grounding. I found it very grounding.
Yep. But to answer your question, Brad, I was just having a quick scroll through Twitter. I'm pretty new as well, so I don't follow a lot, to be fair, but probably the first one that comes to mind would be Mike Mitchell at Ignore Narrative.
I've been digging into him lately,
Yeah, I'll second that. That's one of my favorites.
Yeah, I follow a lot of the monetary policy folks just because I like that sort of stuff. So like Lynn Alden has a lot of really cool stuff on inflation. Luke Groman, that sort of space. Stan Druckenmiller, like because it's great charts, lots of good charts.
I like charts.
I love me some charts.
I've got a list up of I shared my top 10 followings. I won't read them all, but a couple that stand out. Right. Connor Haley at AltaFox Capital, Jeremy Raper, which is Puppy A1. 10K Diver is a really good one. He just posts a weekly thread that's always in great detail. That's a good one to go and learn from. I had Mike Mitchell in there and Ian Castle. There are a few great follows if anyone's interested.
Great.
Yeah, I'd probably add Bill Brewster to that list. All the Value After Hours guys, really. Bill Brewster, Tony Carlisle, Jake Taylor.
Lots of free publicity on this podcast today.
Yeah, and of course at Frank Investing at what is it, B Kellner something or other. What's everyone's Twitter handles?
Jack Duffley.
Yeah, I'm at Tom Investing. If anyone wants to follow along,
I pretty much.
Yeah, Karan's on there. I've seen you liking stuff, but I don't see you ever post anything.
Karan,
it's 551.
It's 351-38710.
There you go.
It's good branding.
Clearly, I'm not very active.
He's trying to remain anonymous as much as possible.
Yeah. Greg Alexander 2.0.
That's right.
Is there any questions coming up?
I was just going to say.
Oh, here's some. Go ahead, Tom.
I was just going to quickly say, pull up the question if you like, but I was just going to quickly say, I couldn't even find a photo of Greg Alexander when I was putting a 13F video together. That guy is fully under the radar.
Yep.
He's on I think he's on Sequoia's website as like a board member, and they've got pictures of everyone and then they're like, no picture included or something. Greg Alexander, like that
saw
guy
that.
does not want to be seen. Anyway, have we got further questions?
There's a question that just came in
One for you,
from
Frank.
James Esposito. Yeah, is that for me, that one?
Yep.
So I guess Brad's been looking this through a little bit too. So VRQ Solutions, I've got a video where I guess I'm probably going to explain it in more detail than I have now. And there's also a Value Investors Club write-up that I can only assume is done by Connor Haley. The start of the write-up starts very similar to his Q1 letter, and there's a lot more detail about it. But overall, it's at a point where it's about to reach profitability. It's about to be listed on the NASDAQ, as far as we know. Management team are running a roll-up strategy in, what do we call it, the transcription services industry, I guess. A lot of legal courtrooms and things like that, making or turning it into, how can I put it, audio. I don't even know how to word it. It shows my understanding of the company.
Transcribing.
Transcribing is the word, isn't it? But they're running a roll-up strategy of all these cheap, old, dated businesses, and the CFO behind it is from, what's the name of the company, Brad? You follow them? Oh, Constellation Software. So one of the best roll-ups. So a great CFO. There should be high returns on invested capital once they reach profitability. And they're a small company with a lot of catalysts about to kick off. So if someone like Connor Haley, who's a great microcap investor, is interested, I think that's one to follow. I've been looking at it here and there, but so far, it's just a bit unpredictable. I can see all the possibilities of high returns going forward, but I can't really forecast it accurately, which is the reason I've stayed away for now.
Yeah, I'm willing to give up a little bit of upside on that one to get a little bit more history, just to wrap my head around it, see what they can do.
Yeah, I think after the NASDAQ listing, if that goes ahead, we'll start to see a lot more information around it, I guess. And that's about the time they probably should reach profitability. So it could be a missed opportunity if we wait that long, but it's a bit difficult to understand at this point exactly what will happen. There's a lot of operating leverage. The margins are growing really fast. The management teams seem great, but yeah, it's a hard one.
I guess to wrap up our 13F episode, Scotty's got a great question. From this 13F season, what was your biggest surprise, and what was your, hey, I expected that one, or one or the other, or both? What do we got? I think, Domino's Pizza was a surprise. Seeing as though they're gearing up for the SPAC, to add another holding like right before that was a surprise. I think even selling out of Starbucks was a bit of a surprise too, completely on the Pershing Square side with Bill Ackman. I can't say I expected either of those things to happen. Yeah,
for me, the only one that really was like expected was Buffett continuing to sell the banks. I kind of expected to see that. And I sort of expected Guy Spear to not do much, but he exceeded expectations there. And then the Alibaba from Owner's Proprietary was the biggest surprise.
I think I expected Barry to be shorting treasuries, but the way he did it, was quite good. The long-term treasury bond ETF short, which was TBT, that was quite nice.
I expected to see a bunch of Baba in the 13Fs, and then that panned out.
Indeed.
The thing that surprised me a little bit was seeing Lilu sell a pretty big chunk of Facebook.
Yeah, that was surprising.
Didn't quite see that coming.
Overall,
at the current prices. Huh?
Did someone add to Facebook at current prices?
Pat Dorsey did.
Was he the only one? I thought there was a couple.
Only one of the ones that I follow.
Yeah, of the value investing types.
Yeah.
The ones that matter.
That's exactly right.
Overall, from the 13Fs, there wasn't too many great ideas that came out of it for me personally. I guess Barber was the standout, which definitely seemed interesting, but it just doesn't meet what I'm looking for, I guess. A few other interesting things here or there, but again, mostly large and mega cap type companies.
Yeah.
The most interesting one to me today has been from the comment here about Bontar Partners, so which I guess isn't a 13F, but nonetheless.
That works.
It's
I think
all
the
that
last
stuff.
time we saw so many guru investors in one company was Micron. Yeah.
Oh,
And that
yeah.
worked
out
In
well
for all of them.
2019 or
Since
something.
then.
I almost thought you were about to say Valiant
Well,
because there was a lot in that one too.
there's even Horsehead.
yeah, and that. So it doesn't always work, but it's interesting to see.
There's a few in Seritage right now, not nearly the level of Baba, but Seritage that was kind of the preamble.
Yeah, actually, Eddie Lampert sold a bit of Seritage, which did
A bit.
take me a little bit by surprise.
Is
A
that
bit,
the only
I mean,
changes to
100%.
Seritage?
Sorry?
Was that the only changes around Seritage, really?
That's the only one I've seen. I must say I haven't done a super deep dive. Yeah, he sold, well, it comes through on the 13F that he sold 100% of his Seritage shares, but he has these OP units, which we won't really get to see, I think, until the next 10Q. Is that right, Brad and Karan? So
There are
it
15
was...
million in OP units. I think there are 15 million that are issued, right? Is it?
I thought it was more like 25.
Okay.
Is that right,
I'm not
Brad?
sure.
Sorry, say again. I was distracted.
Do you know roughly what percentage of SRG that Eddie Lampert sold if you include everything?
When I calculated, he owned like 37% with the OP units. I think it was around a 5% sale, but I don't remember
okay.
exactly. Yeah.
Yeah, so not as dramatic as the 13F
No.
might make it look. Yeah,
No.
but interesting still to see that.
Yep. All right, guys.
It's time to wrap it up. Since Brad's got baby duty right now.
Baby duty. Put me on baby duty.
Yeah,
So,
did we have record viewers, Jack?
I think we did. We reached a peak concurrent viewer record. I think formerly it was around like 30, 35, and we were up at about 45 at our highest. And
There was a lot more activity in the chat, which was cool.
Yeah. Thank you guys for coming
Yeah.
out for this 13F season. It's always an interesting time to see what the big dogs are doing, get some inspiration potentially, and challenge theses. So it's always good stuff. Pleasure talking with you guys as always. For everyone who's in the chat or not in the chat, smash the like button, subscribe, check out our Discord as well, linked in the description, where you can come and talk more about 13F holdings, more about whatever else you want to talk about, as long as it's in that realm of value investing. But until next time, everyone, see ya.
Bye.
Take it.